What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's dive straight into things. Hopefully you've watched yesterday's video. If not, do go check it out. But yeah, there's a few things I want to talk about. So in yesterday's video, I drew our attention to this range right here, this fair value gap between this low and this high, and I was saying how I wanted to see price trade into it and leave it. Now what you'll find is that price is traded quite deeply inside of it and is still sat in there. Now the fact that we're staying within inside of this range suggests to me that price is likely going to continue rallying, as in I no longer expect price to come out of it. When I see a target for price to trade to and for it to reverse at, I don't want to see it spend much time in there. I want to see it trade to it and leave it. However, you can see we've spent 4, 8, 12, 16, 20, nearly 24 hours pretty much hanging around inside of this range. So, and also we're above the 50% level of the range as well. So that's all telling me that this range, they're not going to leave it for now. They're probably going to continue rallying it and pushing price up. Now that's not the only thing that's got me changing or looking at that bias. There is actually some significant divergence going on, and I'll show you that right now, which has completely changed the way I've been looking at the markets and I'm approaching this week in general. So here on dollar, you can see that we've made a higher low, whereas on pound we haven't made a lower high. You can see we've actually made a higher high. So if price was in unison, which it should be, that basically pound shouldn't be going up, because if we add euro as well, I'll just show you what I mean. You can see that euro's made a lower high in line with dollar, and it looks like pound's the one that's misbehaving. So when we see divergence like this, it looks like pound's one that's out of order right now, and what we'll find is that pound's likely going to have to catch up. So we might see some quite large expansion, not from pound to drop lower, and it's also showing strength in dollar, weakness in euro, which suggests that we're likely going to get continuation to the upside. So that's just something to take into account. And with that, with all of that in mind, I'm now looking at the premium as to where price could trade to. So the first high I'd want to see price obviously run would be this high right here for buy stops, and then I'd be looking for this high right here as the next target. And obviously we do have, is it FOMC minutes? I know we've got high impact news tomorrow, and then I'll be paying close attention to this volume imbalance in the premium up here to see if price can get into that. Now I'm not expecting us to necessarily reach that this week at all, but the way that, like I said, we've played around in this range where this fair value gap was, I'm expecting that price is going to use this now as a strong bullish order block to continue higher. So the lowest I want to see price trade tomorrow is going to be the open of the bullish order block. We can make that black, and we'll drop down to the 1 hour, take a closer look. And you'll see that this reversal right here, we came down, filled fair value gap, left it, traded and closed comfortably above this significant swing high. So as far as I'm concerned, if price taps back down into this range, I'd expect it to act as support and push price higher above the buy side liquidity target here. And you can see that we do have a nice fair value gap sat above it as well. So there is reason as to why price may want to draw up into this premium. So I'm just going to drop down to the 15-minute just for a quick look. You can see we're in a bit of consolidation. Price may dip down a little bit, again tapping into this level, but other than that, I'd like to think that the low can get made early in the day with expansion to the upside, to run that buy side liquidity and fill this fair value gap now, especially after seeing that divergence. So I hope that all makes sense. Let's head on to GBP USD. And yeah, as I was saying, GBP is the one that's misbehaving, and we're probably going to see some quite large expansion to the downside on the back of that. So with that all taken into account, I'm looking for price to now run down into this south side liquidity. Why here? Relative equal lows, very relative, very clean lows right there. So I'm expecting price to be able to trade comfortably into that. You can already see we're just moving into that into that Asia session right now with a little bit of an expansion, but nonetheless I'd expect us quite a nice easy day in terms of just a swoop downwards with quite a large expansion to run for that south side target tomorrow. So if we look at the 4 hour, not really much on here, but again I'm looking for these relative equal lows to get targeted. So for now we can get rid of this, we can get rid of this. We can see the way that price tapped, it did tap into the range I spoke about. However, wait, let me see where this is. So it did come down with the discount as I anticipated, but we didn't spend much time there, and then price just rolled over, as you can see. So I'm expecting a continuation of that, and then we also have these lows below here to get taken first as well. So basically moving into the new day, I'm not expecting much rallying at all. In fact, we do have a bearish order block right here, and then that would be the highest I'd want to see price trade, and you can see we've already left that quite aggressively already. So moving into London session, I'd want to see it tap into that the very, very highest, and then once you sort of roll over and price expand quite nicely into the south side liquidity pool that we have below here. So to finish up, we are going to look at Euro USD. You can see we did trade to the target, but did we come out of it? No, we spent way too much time inside of it. This is what I was saying on dollar, spending way too much time in that premium. And we saw divergence, which I only realized yesterday. So now I'm anticipating that price is going to continue to hold that behavior up. So if we look at this bearish order block right here, again, this now gives kind of a range as to where the highest I'd want to see price trade is tomorrow. I doubt it's going to be able to rally back above itself. It shouldn't, especially the way it's been wicking so much. Wick. Look at this entire range. We've wicked into it like a million times, and now we've only just now had expansion. So as far as I'm concerned, this red box which delineates this order block, which is this up close candle right here, the midpoint of that would be the very highest I'd want to see price trade. Don't get me wrong, it can get up there, but I'm expecting us to respect the 50% level, 25% level if we're want to be very specific. I'll just get that marked out, and then that should set us up for some nice shorting opportunities, with the expectation then to run out our sell stops below this low right here as our first target, with a potential continuation down below that. So that's going to be everything, guys. I hope that all makes sense. Do watch yesterday's video, because you'll see how my bias has switched and why it's shifted, and the reason for that is, like I said, that divergence is very clear to me right now. So I'm anticipating that this range, this down and then up, this entire range should be able to provide support for price and help us continue higher. But yeah, don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, join me over on Discord. All the links are in the description, and I will catch you guys tomorrow. Peace.